Hello, this is Dale. And in this video, I'm going to talk about the 2-day to expiration credit spread strategy that I employ. We're going to take a look at an SPX trade we had on a weekly bull put, and that was on April 22nd, 2025. And then I want to do a rack up for the year. So we'll have the first 4 months under our belt. We'll rack those up, see how we're doing. This is the 10th, I think it's the 10th video that I've done in this series. I want to show you all the trades I make and how I've been doing, and hopefully you will join me. This is a very profitable strategy and it's easy to employ for the small retail investor, as long as is also the larger retail investor. Okay, this was a trade that we put on April 22nd. This was a bull put, and what we did is we sold the bull put. We sold the 23 April 51.30. That's this one right down here, and then we go always a 10 point apart. So we bought back the 23 April 51.20, and that gives us a 10-point spread. We got a credit of 90 cents on that. We bought this back the next day, and we bought this back for a net debit of 0. It expired worthless. And what you'll see here is that the day before, the SPX had dropped considerably. It dropped down into the oversold region. You can see it came down to the 127 on the Fibonacci. So when it was down in this region, I was looking for a move to the up direction. Well, early in the morning, we got that move, and it crossed over, and I went ahead and put in that bull put, and you can see that it went up, came back a little bit, but then blew through the next day. So this was expired worthless. So we picked up that 90-cent credit. So the 90-cent credit minus the debit of 0 gives us a 90 cents profit, or $90 on one contract. If you're trading 5 contracts, that's $450 on this trade. And if you're trading 10, that's $900 on this trade. This is past performance is no guarantee of future results. However, I've been showing you the results of this strategy for the last 10 months, and we are way profitable. And like I said, I hope you all can join me. There's a couple of reasons that we do so well. We've got two key edges, and we resulted in an 87% win rate. Well, what's interesting about that is that if you have, let's say, roughly 90% wins, and you win $1 every time you win, and if you lose $3, and that's our loss target, or we don't use the stop loss, but that's a visual stop. So that would be 9 times $1 would be $9 minus 3 for the one loss that we had. So that gives us a net for the 10 trades of $600. And that's the way we do this, is continue to do this month after month. The two big edges that we have is, one, we're going to place a trade when we're overbought and oversold. And this is a combination of a couple of proprietary indicators that I use, and this gives us the first edge. The second edge is we're going to use set up our short strike on the credit spread with the delta of 0.1, and that in layman's terms, that means that 90% of those options will expire out of the money. The big advantage here in these credit spreads is we are sellers. We are sellers of the credit spread. So we, when it expires, it'll expire worthless. That's money into our pocket. So we're going to take all the premium that we got. Let's take a look at the rack up for April. We had April was a month that was going up and down quite a bit, very volatile. March was a very volatile month. March was our first losing month, and April was a tough one. We had 3 wins, 2 losses. The wins far outshined the losses, and ended up with a $600 profit based on 5 contracts per trade. Year to date, we've had 16 wins and 3 losses. The 16 wins was $7,600. The 3 losses were only $2,050. That means that we had, at this point, we have a plus $5,550 based on 5 contracts per trade. Well, what does that mean? For a credit spread, you're looking at 100 contracts per credit spread, and we're looking at a 10-point difference between our short strike and our long strike, and so we're going to need $1,000 per trade to do a credit spread. And so if you got 5 contracts, you're looking at about $5,000. Well, that $5,000 in just 4 months has been turned into $5,550, and we're only we're about a third of the way through the year so far. Past performance is no guarantee of future results, but you can go back and you can see the trades that I've made and how we have done towards the tail end of last year and this year. I always like to show the testimonials because I get a myriad of testimonials every month, and they kind of tell you as a prospective client that there's other people that are doing this and they are a success. The first one comes from Angel M. I've been a subscriber since October 2024. I'm having great success following the trades. The second one was from Dino D. It says, Dale, I love the pace of the 2-day till expiration credit spread strategy. The videos you do in managing the trade and giving the guidelines to do so was priceless. Those are the kind of testimonials I get all the time. I like to share those so that you can see that there's other people utilizing this strategy and making money with it. What I'd like you to do now is to join me. I release 1 to 2 2-day till expiration credit spread trades per week, and I have an 87% win rate on those credit spread trades. You can join me by going to www.optionsinfinity.com. That's www.optionsinfinity.com, and you'll have 2 options. One is you can purchase the workshop, which is 13 about a half an hour each, 13 modules showing you exactly how I do it. The other option is to actually join me and watch a professional as I pick a trade and show you when to get into the trade, and we talk about when to get out. So I hope you all join me. Again, that's www.optionsinfinity.com, and I'm looking forward to having you in the room with us. Bye-bye now.